Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 40. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We normally do this video on the first of every month. I wasn't feeling super great. I'm still not, which is why it's a little bit delayed. And then yesterday, I wanted to put out the video on the FOMC stuff. Seemed a little bit more timely and relevant. But here we go. It's November 2nd. Probably we'll get this video out hopefully before November 3rd, but probably right around November 3rd. As of November 3rd, the total market cap of crypto is currently coming in at about 1.283 trillion, whereas the fair value, according to the logarithmic regression function, is at 2.178 trillion. Now, this represents an undervaluation of approximately 41.12%. Okay. Now, the reason we do these videos is to sort of take a nice break from the rest of the videos, where in the rest of the videos, we'll talk more about sort of other theories as to what's going on and what are maybe short-term outlooks in terms of like, altcoins bleeding back to Bitcoin, Bitcoin dominance going higher, rotation of capital type stuff. But the way I at least like to start off these videos is to just look at the chart, right? I mean, this again, it's a logarithmic scale, and you can see that as time goes on, the cryptocurrency asset class is generally growing by its total market capitalization, right? Be that as it may, the asset class goes through periods of overvaluation and undervaluation. And the periods of overvaluation can last years, just like periods of undervaluation can last years. And according to this chart, we have been in undervaluation territory for over a year now, right? For over a year. That doesn't mean we can't stay in undervaluation territory for another 6 to 12 months. We probably will, in fact, stay in undervaluation territory for, at least the next 6 months. In order for us to go into overvaluation territory, the market cap of crypto would need to go, north of 2.178 trillion. And while it's not completely impossible for that to happen, just to give you, and again, it will, I'm sure it'll likely happen at some point, but to get you to 2.178 trillion would take the market cap moving up, let's see, so all the way up to 2.178 trillion, right? It would take the market cap moving up 72%, right? And again, it's possible that that happens, and I think it will likely happen at some point in the future, but it's just likely not going to happen in the next few months, right? It doesn't mean it's impossible, but it's just not what I would consider to be the most likely outcome in the next few months. And so with that in mind, right, the expectation is that we likely continue to spend time in the undervaluation territory. Now, if you follow this channel for basically since the last 2 years, I've repeated essentially the same message. And that message, and I'll repeat it again today, is that during bear market years and during pre-halving years, oftentimes you are better off sitting with a Bitcoin heavy crypto portfolio. And the reason is it's not a dig at the altcoin market, right? It's not a dig at Ethereum. It's just to say this is what normally happens. Okay? It has more to do with liquidity and sort of macro views than it does anything else. And Bitcoin is a lower risk asset than Ethereum and the altcoin market. That is my opinion. And we could of course debate that, and I'm sure a lot of people would, but history is showing that it has been the correct view that Bitcoin would absorb a lot of market capital or market share, I should say. Okay? Because while 2 years ago saying that Bitcoin dominance was trending towards 60% was seen as as a preposterous idea by many. Today, it sits somewhat comfortably just below 54%. And now it seems like everyone's basically on this Bitcoin dominance bandwagon. Not quite everyone, but it does seem like a lot of people have sort of gotten on the bandwagon of Bitcoin dominance going higher. But this is what always happens. And so if you're looking at this chart and you're saying, well, Ben, we're in undervaluation territory. So why have you been so against altcoin accumulation? And the reason, as I've explained, right, is that they tend to bleed against Bitcoin during this phase. So when you look at this chart, you will see that total market cap was basically at the same valuation, a little bit less, in August of 2022 that it is today, right? Basically the same valuation. But everything's changed. Everything's changed, right? Back then, in August of 2022, dominance was at 39%. Today, dominance is at almost 54%. So while total market cap has gone essentially sideways for the last, 15 months or so, we've seen capital rotation from the altcoin market into Bitcoin. And the reason I have been wary of the altcoin market is because normally when we go into overvaluation territory, it's because Bitcoin leads that move. So if the altcoin market goes anywhere, it's only because Bitcoin went there first, right? It's only because Bitcoin went there first. And so that's why I will continue to reiterate, and I feel like it's backed up by this chart and a lot of the data that we look at, that a crypto portfolio in the bear market year and the pre-halving year is often best served being Bitcoin heavy, right? If you want exposure to crypto during these years, Bitcoin is generally where you want to be. Now, that typically changes in the halving year, And you can understand why it would, because, you go through this period of like 2.5 years, 3 years, where the Bitcoin dominance is only going higher. It basically makes maxis out of almost everyone. And why shouldn't it? I mean, everyone gets tired of all these rug pulls and stuff in the altcoin market. And so everyone, a lot of people become Bitcoin maxis, and everyone sort of sticks their nose up at altcoins. But that is normally when the oversized gains from the altcoin market come and they start to outperform Bitcoin. But I'm telling you, that phase likely does not actually occur in any sustained way until sometime in the halving year, right? So yes, I mean, I know that some people have spent the last 2 years accumulating alts. Most of those positions, I'm sure, are underwater, right? And you'd have been much better off just sticking with Bitcoin through this phase. And again, it doesn't mean that Bitcoin's immune to going down. And I'm still of the opinion that we will see Bitcoin drop at some point, and crush the altcoin market, and that'll sort of mark the end of the bleed of altcoins back to Bitcoin. What you'll notice is that in the last 2 cycles, there was, after going below the red line, we basically trended sideways until we hit the lower regression trend line. Okay? The lower green regression trend line. We trended sideways, and sideways is a very rich way to say sometimes the market cap dropped 50%, right? It's just that when you look at it on a scale like this, it doesn't really seem like much, but you can see right here, total market cap was at over 5 billion, and then it dropped to, to about here. Here it dropped to less than 4 billion. But on the wick that we had back then, if you go look at total market cap in 2015, you can see it actually dropped to less than 3 billion, right? So it was over 5 billion, and it dropped to less than 3 billion. And then this cycle, total market cap was at, or last cycle, it hit around 400 billion at the local high, and then it dropped back down to about 100 billion. When you look at this chart, it doesn't look like it hit the lower green regression trend line, but it's only because we're not including wicks. I think it might be useful to specify the wick on this just to show you how it actually did hit that lower green regression trend line before this bull market really got kicked off, right? Now, of course, you could say the bull market started over here in 2018, right, for Bitcoin, but for a lot of altcoins, the bull market did not start until here. And why did it start there? Because that's when QE, quantitative easing, came back to the market, right? Because throughout this other period, they were basically just bleeding back to Bitcoin. And it wasn't until QE came back, that sweet drug that the altcoin market just lives off of. It wasn't until then that altcoins finally started to really outperform on their Bitcoin pairs. It was once QE returned. So when you look at this wick, or you can't see the wick on here, right? But you see that it stopped out. Total market cap went to about 142 billion. The lower regression trend line was at about 107 billion. But if you include the wick, we went to about 108 billion, right? To the lower regression trend line. And then the bull market really got underway, right? And then we got our move into overvaluation territory. So if we had to think about what causes that, right? So you get these major bull cycles, right? You get exhibit A, B, and C, and then you get this year-long bear market followed by a pretty grueling process where altcoins bleed back to Bitcoin. And Bitcoin can go up during that period, and then at some point, there's no longer sufficient liquidity in the altcoin market, and then Bitcoin drops. But normally Bitcoin's dropping not because of anything crypto related. I think a lot of the crypto related crap gets sort of taken out earlier, already. Not all of it, but there's still some. There's always going to be some. But what happens is that it goes down because of macro conditions, because the stock market is dropping, right? It has nothing really to do with crypto, right? Nothing really to do with crypto. And it's that hitting that lower green regression trend line where the Fed starts to become more accommodative. Now, of course, Powell's not looking at this chart and saying, all right, guys, it's time to start QE. Let's go save the altcoin market, right? But what it does represent is it represents, the market just becoming so exhausted. And when the king bends the knee, right? When you think about the stock market, right? The S&P 500 is up this year, but it's mainly because of the Magnificent Seven, as they call them. The low caps are actually, small caps are actually down this year, a lot of them, right? If you were to go look at a lot of small caps, they've actually lost valuation this year. It's mainly a few stocks that are holding the entire market up, just like in crypto. Bitcoin is holding basically the entire market up. It's not because of your altcoin, probably. And if your altcoin is up a lot, it's probably because it's probably low market cap and doesn't really contribute that much anyways. So when you think about it, Bitcoin is the reason total market cap has mostly gone sideways. But it's that secondary drop to the lower green regression trend line. Last cycle, we got it in March of 2020. The cycle before that, we got it in August of 2015. It's that drop that then ushers in sort of relief, right? Easing. It ushers in that relief, and then that's where the altcoin market tends to bottom out against Bitcoin and starts to outperform. So when you think about crypto investing in bear market years and pre-halving years, I will continue to reiterate that Bitcoin heavy crypto portfolio is much better on average than an altcoin heavy portfolio. That will start to shift likely sometime next year. Okay? So we've been talking about this thing for 2 years now, but that mantra will likely start to shift next year. And the time that it shifts is likely if and when we tag the lower regression trend line. That is when it starts to shift. Because if we come back down here to the lower band, just like we did last cycle, And just like we did the cycle before that, before the real market got on, the real bull market got underway, until that happened, all that really was going on was alts were bleeding back to Bitcoin, right? And I'm not saying no new money came in, right? I mean, some, right? There's still people, that are just sort of DCAing every single week or whatever. But in terms of the amount of money that you need to send us back into overvaluation territory, you need QE, right? You need looser monetary policy, and you're likely not going to get that with inflation at 4%. But you know what's great at killing inflation? Lower asset prices. So if the S&P were to drop and Bitcoin were to drop and crush the small caps, right? If the mega cap stocks drop and then crush the small caps, and if Bitcoin drops and crushes the altcoin market even more, then that's where QE comes back. So when Bitcoin theoretically drops, you either look for a higher low, like last cycle, a double bottom, like the cycle before, or worst case scenario, it could be a lower low, right? The cycle before that, it was a higher low. So you have two examples of higher lows, and you have one example of a double bottom, right? If you were to look at where the lower green regression trend line is today, it currently sits at around 700 billion, which is actually lower than where we went back over in, back over here in late 2022. But you could have an example where total market cap goes back down to 700, 800 billion. But, for Bitcoin, it could be a higher low or something, could be a double bottom, could be a higher low. But for the altcoin market, it could be a lower low, right? And that's what happened last cycle, right? It's what happened last cycle. And a lot of altcoins did put in lower lows in 2015 as well, late 2015 as well. So I'm going to keep saying what I'm saying. I know people want me to shift my tune, but if you took an honest look at the market over the last couple of years and thought about how many people faded the Bitcoin dominance, and here it is comfortably sitting just below 54%, it seems like it's en route to 60%, which is our target, plus or minus a couple percent, right? I mean, it's not necessarily important exactly the number it goes to, although I think it's headed to about 60%. The more important thing is to recognize directionality, right? The direction of it. And the direction of the dominance is likely higher. Okay? And that is likely not going to change until we tag the lower green regression trend line. Right? Which normally represents a 65% undervaluation of the entire asset class. Now, so far, you can see that we are at 41% undervaluation, right? We're currently at 41%. But if you were to go look at the last two cycles, you'll notice that at some point we hit about 65% undervaluation, right? Or at least 60% undervaluation. 60 over here, it was like 65%, maybe even a little bit more. But about 60 to 65% undervaluation is, I think, what you're ultimately looking for that altcoin market to start outperforming Bitcoin. You can see we hit that level in September, October of 2015. We hit that level in March of 2020, and we are still just sitting off of that level today, right? So until we hit that level, I still am under the assumption that Bitcoin will outperform the altcoin market. And so crypto portfolios are often going to be better served being Bitcoin heavy at this stage of the cycle. I saw a funny comment the other day, or actually no, it was today, and the person said, they didn't actually convert any of their altcoins to Bitcoin, but just by nature of market conditions, their portfolio has become Bitcoin heavy. Not because they were trying to make it Bitcoin heavy, but most of their altcoins just kept going down while Bitcoin has kind of held its own, right? So, you can go through the steps of making your crypto portfolio Bitcoin heavy in bear market years and pre-halving years. And if you don't, the market will probably do it for you, right? Just by showing you that the rest of the market bleeds back to Bitcoin, and the market, that the share of your portfolio that's Bitcoin is likely just going to go up. And the Satoshi value of your portfolio, if it's an altcoin heavy portfolio, will likely go down. So by maximizing your Bitcoin in your portfolio through these years, it maximizes, generally speaking, the Satoshi valuation. Now, yes, there's a few altcoins that have outperformed, but most of them have not. And that's fully represented in the fact that dominance is near 54%, when a year ago it was sitting at 40%, right? Literally November of 2022, it was sitting at 39%. Today it's almost 54%. It's gone up 15% from 39 all the way up to 54%. That's a huge move in dominance. And think about how badly the altcoin market has been wrecked during that entire process. So I still continue to think that we've been witnessing a rotation of capital. And there has been some new money to come in, right? I mean, there's definitely, it's not to say that no new money has come in. It's just not as much as maybe you would expect, considering that total market cap is essentially where it was 15 months ago. And the reason why it's that is because Bitcoin went up and alts went down, right? So I think what I'm looking for to get, to sort of get interested in the altcoin market would be to see us come back into that lower regression trend line. Now, what if we don't go there, right? Well, if we don't go there, then still Bitcoin would likely lead the move into the overvaluation phase in the first place. Therefore, Bitcoin heavy portfolio is likely better than altcoin heavy portfolio. Bitcoin tends to make the move first, right? If you think back to last cycle, Bitcoin was at new highs, and when Bitcoin was at new highs, Ethereum was at like 50% of its all-time high. Bitcoin makes the move first. The market is never healthy because Ether went up or because some random altcoin went up. The market is healthy when Bitcoin goes up. Bitcoin leads. The rest of the market follows. You don't have to be a Bitcoin maxi to recognize that, right? That's just the way the market works. And it's the way it's always worked. It's probably going to continue working like that. So here we are, 41% undervalued. If we don't go to the lower green regression trend line, then it's likely because Bitcoin, Bitcoin would have led the move into the overvaluation phase. I still think we likely will visit the lower green regression trend line, but not because of anything Bitcoin related, not because of anything crypto related. If anything, we're getting rid of a lot of the baggage from the prior cycle, over the last few months. But the reason it happens is because of the macro, right? It's in the last cycle, it was a recession. Cycle before that, it was a recession scare, right? In both cases, you had a recession and a recession scare. And when you look at the yield curve today, and you think about this uninversion process, right? The 2-year just uninverted the 30-year, right? So go take a look at that. If you look at treasury yield spreads. So we mostly talk about the 3-month and the 10-year and the 2-year and the 10-year, but take a look at the 30-year and the 2-year. Look at this. Uninversion just happened, right? Uninversion. The uninversion process is occurring. Now, why is that relevant? Well, it's normally after uninversion that you get a recession, right? The gray shaded regions are recessions. It's after uninversion where the recession takes place. In the dot-com crash, the recession started. So uninversion took place in November. Recession started in February, right? I mean, not that much later, right? February or March, right? I mean, you're talking about just a few months later, right? And the market was still trending down, right? I mean, but the recession just started a few months later. Over here during the financial crisis, after uninversion, it took a lot longer because uninversion here took place in March of 2007. Recession didn't start until November. So you're talking about closer to like 7 or 8 months before it started. But even then, I mean, the market did go up and put in some new highs, but not much higher, right? I mean, it had a rally. The S&P sort of rallied here from around 1400 up to around 1550. So a nice little rally, but you can ultimately see what came after it. And then you have this one over here, right? 1990, and you can see sort of this uninversion process take place, and it was sort of all over the place, to be completely honest. And I don't really like using the 2-year and the 30-year. I think it's a bit noisier than the other ones. But again, the recession eventually came, and so too did lower lows in the S&P. So if you think about what could possibly cause total market cap to go back down, it's Bitcoin falling back in, not because of anything that's wrong with Bitcoin, right? But it's because of the macro, right? It's because of the macro conditions. And it makes a lot of sense when you think about it logically, right? Altcoins thrive on excess liquidity. The Fed is draining excess liquidity. Altcoins will likely not turn it around against Bitcoin until QE comes back. QE is not going to come back when core CPI is above 4%. If there's pain in the market, and the major blue chips fall, like if Apple's dropping, and if Bitcoin's dropping, and if Google and Microsoft, right, if those are dropping hard, then that will lead to a Fed pivot, right? That will lead to a Fed pivot. And that is normally where this move into the overvaluation territory actually begins, right? That's where it begins. So that's my thesis on the market. It's been my thesis for 2 years now, right? And it will continue to be my thesis. And I will remain stubborn on the altcoin market until the Bitcoin dominance is closer to 60%, likely until we see total market cap come back down to the lower green regression trend line. And if it doesn't go back down there, then it's only because Bitcoin led the way to overvaluation territory, in which case you still would have been better off with a Bitcoin heavy portfolio. So the thing that we've said all year, the reason why we spend so much time talking about Bitcoin dominance, because a lot of people say, well, how do you make money on Bitcoin dominance? Bitcoin dominance helps you like not lose your money. It helps keep you out of all these super risky altcoins that, for the most part, just keep bleeding back to Bitcoin, right? Bitcoin dominance helps you save your money, right? It helps you focus on what you should be focused on. It doesn't mean that Bitcoin can't drop, because in the end, it probably will if we get a recession. But it would have preserved the Satoshi valuation of your portfolio by being Bitcoin heavy throughout the last couple of years, right? Throughout the last couple of years, and especially in the pre-halving year, right? When you normally see Bitcoin go up, and then it sort of pulls back, right? So that is my view. This is total market cap of the entire asset class. Again, currently coming in 41% undervaluation. Fair value is above 2 trillion. I'm guessing, and I've said this all year, I'm guessing that we spend the entire year below the below the red trend line and above the lower green regression trend line. And I've been consistent with that message this year, and throughout the entire year, we basically just stayed right in between them. And I would guess that the move to overvaluation comes only after going to the depths of undervaluation, right? So that is what I would guess would have to happen, is you go to the undervaluation territory and then you go overvaluation. It doesn't mean you can't go higher, closer to the fair value before dropping. And in fact, you can see that that's actually what happened last cycle, right? I mean, Bitcoin sort of rallied into that fair value, then dropped. We know that wick actually went to the lower green regression trend line, and then QE came back and crypto exploded to the upside. Okay, that's what we're looking at. This is the beauty of mathematics series, where we talk about all these larger trends in the market and how you navigate crypto as a whole. I do want to say that if you have not heeded my sort of warnings on the altcoin market and you're underwater, first of all, if you didn't heed my warnings and you've made money on the altcoin market, then congratulations, right? You picked out a few that actually outperformed. And there's always a few that do. I've always said that, and I will always say that. If you did not heed the warnings and you're down a lot in the altcoin market, then you still have it. I mean, there's still a good chance that eventually that altcoin will go back up, as long as you're not putting it into some random, you know what, that is just a, you know, just a scam or something, right? Is if it's a legitimate project, then there's a good chance you'll see it sort of return to its glory days eventually, right? And I mean, it would have been a lesson to learn. Um, but we'll just take it one step at a time, and we'll keep doing these videos. And my guess, you know, sort of the macro view is I'm guessing we stay between these two trend lines for the rest of the year. I'm guessing we tag the lower green regression trend line at some point within, let's call it, I don't know, 6 months, 7, 8 months, 6 to 8 months, I'm guessing. And then from there, QE returns, and then the market moves back up to the upside. In fact, if you go look and take a look at what the bond market thinks, the bond market thinks cuts are coming in June of 04, or sorry, of 24. We'll see if it takes that long. I don't know how long it's going to take exactly, but you know, note that, you know, QE returning sometime in late 2024 is likely when you start to see altcoins outperform Bitcoin. And as you get into 2025, right? As you get into 2025, then the expectation could very well be that we find ourselves in overvaluation territory again. But that's still pretty far off. A long way to go to that. So just be aware that, you know, the message has been pretty consistent on this channel for a while, but altcoins will start to become more attractive from a risk-adjusted returns point of view, likely sometime in 2024, likely when QE returns, and likely after total market cap goes to the lower green regression trend line in the secondary scare for Bitcoin, which marks the bottom for the altcoin market. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.